MSTY, the YieldMax MSTR, aka MicroStrategy, Option Income Strategy ETF, will destroy your retirement. This is not clickbait. It's a desperate attempt to save investors from what could be the worst decision they'll ever make. I am dead serious when I say that as an investment professional who's analyzed thousands of investments in my career, this is quite possibly the worst one I've ever seen. And I think there is a very high probability that it will end in tears for anybody who hopes to retire on this. Here's why. Most investors are attracted to the yield, which right now has been quoted at 130%. And when you go to the company's website, that's the first and pretty much only thing they want you to see up front. Clever marketing. But there's way more to it than that, and the devil is in the details. MSTY is a single stock covered call ETF that invests in MicroStrategy, which actually just changed its name to Strategy, so I'll call it that from here on out. Let's start with a little backstory. Understanding MSTY starts with understanding its underlying investment strategy, which most YouTube videos on MSTY seem to gloss over. How you make a video about an ETF that only holds one investment and don't make an attempt to understand what that investment is beyond me, but I digress. Strategy is technically a software company, but let's be real. It's not a software company. It's a Bitcoin proxy. It was founded by Michael Saylor, who's become a bit of an icon these days, in 1989 when he was only 24 years old. It went public in 1998, a darling of the tech bubble that had a rough patch thereafter, like many tech companies, but did ultimately survive. Lesser known, Saylor and two other executives at MicroStrategy were actually sued by the SEC in 2000 for materially overstating their revenues and earnings. Worth noting. Fast forward to 2020, and MicroStrategy was basically a barely profitable, no longer growing software business. But then they started buying massive quantities of Bitcoin, and everything changed. So before we go any further, let's be clear. I'm not saying Bitcoin is a bad investment. I'm not saying strategy is a bad investment. I'm saying MSTY is likely to be a bad investment, even if Bitcoin and strategy are good investments. To understand why, let's dive a click deeper into how the ETF actually works. At its most basic level, MSTY is a covered call ETF that invests in strategy and sells call options on it, or, well, a much more complicated version of that. A normal covered call ETF strategy would involve buying a stock and then selling a call option on it. If you're new to those, here's a 30-second recap of how they work. A call option gives the buyer of the option the right to buy a stock or an index or something like that at a set price. Of course, they would only want to do that if the stock goes higher than that price. So if you're selling those options, like MSTY is, that means that someone else gets to benefit from the upside in strategy stock if it goes up a lot. That means that you get a little of the upside potential, but then anything beyond that set price, which is called the strike price, you give up. And what you get for giving up your upside potential? A massive income check, and that is why people buy ETFs like MSTY. MSTY is a little different than other covered call ETFs, though, because it doesn't actually own any of strategy stock. Instead, it uses what's called a synthetic covered call strategy, which in layman's terms means it tries to replicate the strategy position or the strategy stock through options. This has its ups and downs, but to be honest, I'm a little afraid I'll lose you if I start getting into auction maps, so I'll spare you the details. I just think there are much more impactful things that we should be focusing on. For example, the yield and returns are highly misleading. Wait, the yield and returns? You mean the two primary reasons that investors own it for? Yes. So to show you why, I'm going to start with its return from inception through November 20th, 2024. This is total return with dividends reinvested, by the way. It was up 339%, over 4x. And hadn't I picked this date? Because down there at the bottom right, that's showing the volume, aka buying and selling activity. That was the peak of the buying, right around the US election when everyone assumed Trump would be good for Bitcoin. But to be fair, let's say you were a little earlier to jump on the bandwagon and you invested in this little dip here before the massive run-up. That's November 13th, 2024. Even though your MSTY investment went up 30% right away, you're still down today over 13%. And actually, If you bought when most people were buying it right at the top, you'd have lost over a third of your investment, even after reinvesting all of the dividends. And when were most people selling? Down here. So, how did this happen? Well, it wasn't all Bitcoin. During that same period, Bitcoin was only down 10.6%. So, you're telling me that MSTY, which is paying a 130% income stream, meaning something like 30 plus percent income over that 3 month period, fell over a third in value, including the dividends, while Bitcoin was only down 10.6%? Yes, that's what happened. And how did that happen? Because MSTY's underlying investment strategy, which is shown here in red, was down 46% during that time. But wait, if almost the entire value of the company is in its Bitcoin holdings, then how could it fall 46% while Bitcoin only fell a little over 10%? Because at its peak in November, Strategy stock was trading at over 3.5 times the value of its assets. Now it's more like 1.66 times the value of its assets. So that premium has come down significantly. But even then, it is still, from here, a huge source of potential risk for Strategy stock and then, by extension, for MSTY. Strategy has basically become a proxy for Bitcoin. And where many individual investors can just buy Bitcoin directly or buy Bitcoin ETFs nowadays, many asset managers, like mutual funds, for example, can't buy Bitcoin directly or Bitcoin ETFs. MicroStrategy is the only way they can get access. Or is it? Well, not anymore. Now there are at least 6 companies doing the same thing, which means I'm not sure how much higher the premium will go. It will probably continue to be volatile, but over time, I would assume it would generally turn lower, which would be a headwind for Strategy compared to Bitcoin. But the real issue comes when you slap covered clause onto this and rely on it in time. Bitcoin and Strategy, those are high risk, high reward investments that could give you massive returns or variable returns. But the reason I think MSTY is such a flawed strategy is because even if Bitcoin and Strategy do really well in the long run, MSTY can still fail you miserably, especially if you're relying on the income in retirement. So let's start with why the returns are so unreliable. MSTY has only been around since early 2024, and in that time, it's up 190% with dividends reinvested, way behind Strategy stock, up 280%, but way ahead of Bitcoin, and 190% in a year is pretty incredible on its own. So we saw it did way better than Bitcoin on the upside and way worse on the downside. So I would think of Strategy as sort of like a leveraged Bitcoin position. Now, what's the problem with that if we assume Bitcoin and Strategy will go up over time? They may go up over time, but they won't go up all the time. We haven't seen it since MSTY was started, but we have seen what can happen with Bitcoin and Strategy. In 2021, Strategy stock fell over 64% in just 3 months, while Bitcoin was only down 17%. Then, after a partial recovery, it fell 76% in about 8 months when Bitcoin fell 58%. And before Strategy started buying Bitcoin, Bitcoin had lots of big drops like that, like when it fell more than 84% from late 2017 to late 2018. Even though Bitcoin and Strategy recovered, MSTY may not if that happens again. Right there in the fine print on their website, it tells us that MSTY halves the potential gains when Strategy goes up, but is subject to all of the potential losses when Strategy goes down, which may not be offset by the income received. And here's where we get to why the income is misleading too. Well, really 3 reasons. First and simplest is that the distribution rate is just the most recent 1-month yield multiplied by 12 and divided by the current net asset value or NAV. So basically, it assumes that the most recent yield is going to be the same every single month for a whole year. But, of course, the income doesn't stay remotely the same. Its first distribution was over $4 per share. The last one was less than half of that. And it's been all over the place in between. The second reason that the yield is misleading is that the yield is a percentage of NAV. And in anything other than an incredible year in Bitcoin and Strategy, like we've had since MSTY's inception, the NAV is likely to go down. That means your yield is likely to go down over time too, because the yield is based on the NAV. As a percentage, The yield will fluctuate around and may stay around the same, but it's a percentage of the NAV. And if the NAV goes down over time, your actual income payments will also be very likely to go down over time. And the third reason, and the most important reason, that the yield is misleading is that you really can't take it out or you'll be nearly guaranteed to run out of money in your retirement. Remember that glorious 191% return you've gotten in MSTY since its inception? Well, if you've been taking out the income, you'd actually be down 5%. And that was an incredible year for Bitcoin and strategy. If you had just fast forwarded to March 27th and invested there, your MSTY would be down 55%, while strategy stock was actually up 33%. That's an 88% gap. This significant NAV erosion happens because a big portion of the income that you receive is return of capital. They're basically giving you your money back. And if you take all that out as income, you are almost guaranteed to run out of money. You're just taking the money out of your account, basically. Even if you're reinvesting all of the income, the underlying single stock position, which is basically a leveraged Bitcoin holding, is so incredibly volatile that it destroys the long-term potential of a covered call ETF. It basically breaks the structure so that it's almost impossible for it to work in the long run. Sure, if it goes up 100% every year, it'll be amazing. And if we have another 50, 60, 70, 80% drop in Bitcoin, of which we've had many before, strategy is likely to go down even more than that. And MSTY is likely to lose a significant amount as well. If you're taking out the income, then you'll definitely never recover. I mean, in a year where the thing was up 190% total return, it was down 5% if you were taking income. So that's the number one reason that income is so misleading. Even though I gave you 3 reasons, you really can't take it out or you're nearly guaranteed to run out of money. And the past returns are also misleading because it's only existed in an incredible period for strategy stock. But we know strategy is likely to be extremely volatile since it's basically a leveraged Bitcoin position and it just dropped almost 50% in a heartbeat with Bitcoin barely down. And we know that the income doesn't provide that much downside protection during short, quick downturns, which they warned investors about on their website, and we're now seeing play out in real time. For an income investor relying on this in retirement, this is almost certain to end in tears. But even if you're reinvesting the income, the potential for a 50+% loss in MSTY is very real. And if you have a loss like that, it will be really hard to recover because your upside will be capped. Remember, this 34% drop was in a period when Bitcoin was only down a little over 10%. And we've seen Bitcoin drop more than 80% before. If your investment drops by, say, 75%, so like you had $100 and now you only have 25, you would have to double your money twice just to break even. Is that impossible? No. We've already seen MSTY earn a 200% return in a year. But would I want to rely on that? Absolutely not. And did investors really capture that? Probably not many of them, because the heaviest amount of buying activity was here at the top, and the heaviest amount of selling activity was there at the bottom. There's also the potential that if the price of Bitcoin goes down enough, strategy could have trouble paying back their debt, default, and potentially go bankrupt, wiping out the stockholders and MSTY completely. I'm not predicting if that will happen, but it is a possibility. In my opinion, this is just way too risky and way too good to be true to be a reliable retirement income fund. I think it's fool's gold, and while I can't give personalized advice on this channel, I'll just say this. If anyone I cared about ever asked me if they should invest in this, I would do everything in my power to convince them not to. If you found this video helpful, hit the like button, leave a comment with what you'd like us to cover next, and subscribe so you won't miss it. And if you'd like to connect with my partner Kyle and I directly, you can do so by joining our Discord through the link in the description below.